Welcome, future CPAs. Look, if you're an accountancy student trying to navigate the absolute maze that is the Philippine tax code, well, you're exactly where you need to be. In this explainer, we're not just passively reading the law to you, we're going to literally hack your brain for long-term retention. We're building those neural pathways you absolutely need to crush the LECPA. So let's dive right into this highly focused session. We're going to decode the examiner's playbook for other percentage taxes, specifically sections 116, 117, and 118. So here's the age-old question, right? How do you actually memorize these sections without pulling a desperate all-nighter, only to forget the whole shebang the very next day? You know the exact feeling. You read a section, it totally makes sense, and then a week later, poof, gone. Well, we're going to solve that right now. We're totally ditching those massive walls of text and using visual, brain-friendly study hacks instead. By the end of this explainer, recognizing these tax rules is going to feel like pure muscle memory. Mastering other percentage taxes. White backgrounds, pure focus, zero distractions. We are keeping it visually clean so you can lock this in for the board exam. All right, let's anchor the absolutely most critical piece of data right off the bat, 3%. I want you to lock this number into your visual memory right now. For the vast majority of other percentage tax or OPT scenarios you're going to encounter on the boards under sections 116 to 118, the baseline rate is exactly 3%. Seriously, when in doubt, just start your logic tree right here. And here's your second foundational number, 3 million pesos. This is the absolute ceiling for gross sales to be exempt from VAT, and instead fall under that 3% OPT. If a small business crosses this line, boom, they enter VAT territory. Under 3 million, we're generally talking OPT. Keep these two numbers, 3% and 3 million, front and center in your mind as we go through this. Section 116, Small Business OPT, the rule, the trap, the hack. Let's decode the examiner's mindset. First up is the core rule. Section 116 imposes a 3% quarterly percentage tax on non-VAT registered entities whose annual gross sales do not exceed 3 million pesos. Okay, the absolutely crucial detail here is the word quarterly, alongside that strict combo of being non-VAT registered while staying under the 3 million peso threshold. If a business meets these specific criteria, this is their tax. Simple enough, right? But here comes the examiner trap. Board examiners literally love using absolutes to throw you off your game. They'll give you a scenario and make you wonder, wait, is every single non-VAT registered seller automatically subject to this 3% OPT? If you just blindly memorize the baseline rule, you'd probably be really tempted to say yes. But remember, we have to think like an examiner here. Let's break that trap wide open. On one hand, yeah, we have our standard Section 116 payers. But look at the flip side. This right here is your hack. These specific entities are completely exempt from the Section 116 OPT, even if they perfectly fit the profile. We're talking about self-employed folks who availed of the 8% income tax rate, marginal income earners making 100,000 pesos or less, and cooperatives. If you see any of these three pop up in a multiple choice question, your alarm bells should be ringing loudly. They do not pay the 3% OPT, no way. Moving right along, Section 117, Domestic Passenger Transport, the common carrier's tax. Okay, the core rule for Section 117 is this. A 3% OPT on domestic land carriers for the transport of passengers. I need you to mentally highlight two specific words for me right now, land and passengers. This particular tax is specifically targeted at your buses, your taxi cabs, and your keepers of garages. It's a highly, highly specific rule. Which, of course, naturally leads us to our next examiner trap. What if the transport in the question isn't a bus or a taxi? What if a problem suddenly asks you about the gross receipts of a banca operator? Or maybe someone driving a kalesa, an animal-drawn vehicle? Are they actually subject to this 3% common carriers tax? And this brilliantly illustrates our next exemption hack. The answer is a definitive no. Bancas and animal-drawn two-wheeled vehicles like kalesas are strictly exempt from the common carriers tax. Let's lock in this visual right now. Picture a wooden banca and a horse-drawn kalesa just breezing right past the tax collector. They bypass Section 117 entirely. All right, let's throw another curveball your way. Honestly, this is arguably the most dangerous pitfall in Section 117, and examiners use it constantly. We know domestic land carriers transporting passengers pay the 3% OPT. But what if that exact same domestic land carrier is transporting cargo or goods instead of actual people?
Here is your hack to absolutely destroy that trap. Check out this comparison. Scenario 1. Transport of passengers by land equals the 3% OPT. Scenario 2, transport of cargo or goods by land equals that. It's a completely different tax regime. The very second the freight changes from human beings to boxes, the tax shifts from OPT straight to VAT. You've got to make this distinction an instant mental reflex. Land passengers, OPT. Land cargo, VAT. Every single time.
Awesome. Let's shift gears and take this global. Section 118, International Cargo Tax, Flights, Freights, and Foreign Carriers. The core rule here slaps a 3% OPT on international air or shipping carriers doing business right here in the Philippines. But you need to pay very, very close attention to the base of this tax. It's based exclusively on cargo or mail originating from the Philippines in a continuous flight or voyage. Originating is the magic word here. If it's incoming, it's just not subject to this specific tax. So let's test your pattern recognition with another classic examiner trap. Okay, we just learned that under Section 117, domestic land carriers pay OPT on passengers, not cargo. Now, under Section 118, do foreign carriers pay the 3% OPT on transporting passengers out of the Philippines? See what we're doing? We're flipping the dynamic.
The answer to that is a massive no. Here's the hack. Foreign corporations are totally exempt from VAT, and they pay 0 OPT for transporting passengers internationally. For these international carriers, passengers literally mean 0 VAT and 0 OPT, thanks to reciprocity and international treaties. They only pay the 3% OPT on the cargo and mail that actually originates from the Philippines.
Now let's see how all of this builds into the absolute ultimate visual study hack. Honestly, this matrix decodes like 90% of the transport tax questions you're going to face on the board exam. Just look at the rows and columns. Domestic land passenger, 3% OPT. Domestic land cargo, VAT. Okay, what about domestic air or sea? Well, it's actually VAT for both passengers and cargo. And for our international foreign core, passengers are completely exempt, but cargo is 3% OPT under Section 118. Stare at this grid for a second, burn it into your brain. This is your holy grail for transportation taxes.
LECPA retention hacks. Get your screenshot ready.
Seriously, snap a picture of this. Let's rapid fire this review. Section 116, non-VAT plus sales under 3 million equals 3% OPT. The trap, 8% availers, marginal earners, and coups are exempt. Next, Section 117, domestic land plus passengers equals 3% OPT. The trap here, land plus cargo equals VAT. And the exemptions, bancas and calissas. Finally, Section 118, foreign carrier plus cargo originating from the PH equals 3% OPT. Guys, this right here is the entire explainer distilled into pure, highly testable facts. All right, I want to end on a final thought, just to really test your active recall. Ready? If a domestic airline transports cargo within the Philippines, is it subject to VAT or the 3% OPT? Don't just guess. Consult that mental matrix we just built in your head. Remember, domestic air is not domestic land. Think it through, review that screenshot, and keep training that examiner mindset. Keep studying smart, and I'll catch you in the next explainer.